Just when you think the crypto market is starting to get better, and what happens? Trump signs another tariff order. This time, it's a pretty big one. Something just happened in global politics that almost nobody in crypto is talking about yet, but it could ripple across the entire financial system. Donald Trump has just signed an executive order that could allow the United States to impose tariffs on countries that do business with Iran. Now, at first glance, you might be thinking, Matty, what has this got to do with crypto? But here's the thing. Moves like this don't just impact oil, trade routes, or politics. They can shake global markets, affect currencies, they can trigger risk-off sentiment, and yes, they can absolutely impact Bitcoin, XRP, and the wider crypto community. And today, I want to break down exactly what Trump has actually signed, why this is happening now, which countries could be affected, and why this could escalate into something bigger. And most importantly, what this could mean for crypto investors. Because this is one of those stories that looks political on the surface, but underneath, it's actually financial. Before we jump into today's breakdown, a quick heads up, episode 5 of the UK Crypto Podcast is officially out now. In this episode, me and Paula Talks Crypto dive into a really interesting topic. Is crypto actually risky, or is it the behavior that's risky? We talk about emotional trading, hype cycles, common mistakes people make, and honestly, it's one of those conversations I think a lot of people in crypto need to hear. I host the podcast alongside Paula Talks Crypto, and we release a brand new episode every single Friday at 7 p.m. UK time. You can get it here on YouTube in the podcast section or over on Spotify. I'm going to link the episode at the end of this video so you can enjoy today's breakdown. You can go and watch it right after this video. Right, let's get into today's news. First, let's get the facts straight. Donald Trump has signed an executive order that allows the United States to impose tariffs on countries that continue doing business with Iran. Now, this is important. He has not automatically applied tariffs to every country right now. What he has done is create the legal framework that allows the US government to apply tariffs quickly if they decide certain countries are supporting Iran economically. Reports suggest that those tariffs could be around 25% on imported goods. Now, 25% is not small. This is the type of number that can completely change trade relationships overnight. This all comes back to ongoing geopolitical tensions involving Iran. Iran plays a huge role globally in oil production, Middle Eastern geopolitics, trade routes, and military alliances. The United States has historically tried to limit Iran's global influence through sanctions, but this move is slightly different. Instead of only targeting Iran directly, this targets countries that trade with Iran. That is a much bigger move. It's basically saying if you financially support Iran, you might pay the price when trading with the United States. And considering the US is still one of the largest consumer markets in the world, that is a serious pressure tactic. So, which countries could be affected? And this is where things get interesting. Several major economies still have trade relationships with Iran, including China, Turkey, United Arab Emirates, India, and parts of Europe, including the UK. Many of these countries rely heavily on exports to the United States. So they could find themselves stuck between two economic forces. Do they continue trading with Iran, or do they protect their trade relationship with America? This is a huge decision for some countries. And historically, when global trade tensions increase, markets become volatile. So let's simplify tariffs quickly. A tariff is basically a tax on imported goods. If the US places 25% tariffs on goods from another country, that makes those goods more expensive in America, which usually leads to reduced demand, lower exports, slower economic growth, and currency pressure. And when countries start responding with their own tariffs, that is when trade wars can begin. We have seen this before, and every time global trade tensions rise, financial markets feel it, especially the crypto markets. We saw it all the way through 2025. Every time they were announced. When geopolitical tensions rise, investors usually move into what they call safe haven assets. Traditionally, they include gold, US dollar, and government bonds. When this happens, investors often pull money out of risk assets like stocks, emerging markets, tech growth sectors, and crypto. Now, that does not always mean crypto crashes, but it usually means volatility will increase. And right now, volatility is already high. Let's zoom out for a moment. We are already in a major crypto pullback. Bitcoin has experienced around a 50% correction from recent highs, and XRP dropped all the way down to around $1.11 before bouncing back towards the $1.40 mark. On top of that, the fear and greed index has recently dropped to around 5. This is extreme fear. This is not normal fear. This is like the extreme of extreme fears. It's actually lower on the fear and greed index than even the COVID time, or even the FTX crash, or even the Luna incident, which means sentiment across the market is already fragile. Now, when fragile sentiment meets global political tension, that can create short-term pressure. Crypto does not live in isolation anymore. Years ago, Bitcoin moved mostly based on crypto-specific news. That changed. Now, crypto is deeply connected to interest rates, global liquidity, trade relationships, institutional investment, and currency stability. When geopolitical tensions rise, institutions often reduce exposure to risk markets temporarily. That can lead to short-term selling pressure across crypto. But here's the other side. Geopolitical tension can actually be bullish for crypto long-term, sometimes. Because when trust between global financial systems break down, people start looking for alternative financial systems. And that is exactly what crypto was built for. Bitcoin was designed to be borderless, decentralized, independent from government control. And XRP was designed to improve cross-border payments efficiently, which becomes very interesting when countries start putting trade restrictions on each other. Let's talk specifically about XRP for a moment. XRP focuses heavily on international payments and liquidity solutions. If global trade becomes more complicated and traditional payment rails become slower and more expensive, that increases demand for faster cross-border settlement systems. This is exactly the type of problem XRP is trying to solve. Now, this executive order does not instantly boost the XRP price. In fact, far from it. But global financial friction is exactly the type of environment where Ripple's technology narrative becomes stronger. Another massive part of this story is oil. Iran is a significant oil exporter. If trade restrictions increased around Iranian oil, that could impact global oil supply. And historically, when oil prices rise, inflation pressure increases. Inflation heavily influences central bank decisions on interest rates. And interest rates are one of the biggest drivers of crypto market cycles. So even though this story looks like it's about tariffs, it could ripple through to the energy markets, inflation, central bank policy, global liquidity, and crypto investment flows. So could this trigger market panic? Possibly, but it depends on the escalation. Right now, this is more of a warning move. It creates the option to apply tariffs, not automatic enforcement. Markets usually react strongest when policies are enforced, countries retaliate, or trade routes get disrupted. If none of those happen, markets may stay stable. But if this escalates into a wider trade conflict, volatility could increase significantly. So, what should investors watch next? There are several key signals to watch carefully. Firstly, do tariffs actually get applied? Do countries retaliate? Does oil prices start spiking? Does global stock market sentiment weaken? And does the US dollar strengthen aggressively? These are usually early indicators of global financial stress, and crypto tends to react quickly during financial stress environments. So what's my personal market mindset right now? Whenever global fear spikes, I remind myself of something important. Crypto markets move in cycles, and historically, extreme fear zones often create major long-term opportunities. Now, that does not mean markets cannot go lower. They absolutely can. But panic selling during peak fear has historically been one of the biggest mistakes retail investors make. Smart money tends to accumulate during fear and distribute or sell during hype. And this is why the next few weeks could be huge. Between geopolitical tensions, regulatory developments, and macroeconomic uncertainty, the next few weeks could genuinely shape the direction of the market for months. If tensions calm down, markets could recover quickly, but if trade conflict escalates, we could see extended volatility across the global financial markets. And this is the reality nobody really likes to hear. Markets do not move in straight lines. Even during bullish cycles, we get aggressive corrections. Even during bearish cycles, we get violent rallies. And macro news like this often acts as fuel for those swings. And if you zoom out historically, even major geopolitical crisis eventually passes. But the financial system built during those periods often shape the future. And right now, crypto is still evolving as part of that future financial system. So, my final thoughts. Trump has signed an executive order that allows tariffs on countries trading with Iran. It has not triggered tariffs immediately, but it creates powerful geopolitical and economic pressure tool. And if this escalates, it could ripple across the global trade, oil markets, inflation, investor sentiment, which means yes, it absolutely has the potential to impact crypto markets negatively. And short term, it could increase the volatility. But long term, it reinforces why decentralized financial systems continue gaining relevance. If you enjoy these macro breakdowns and want daily updates explaining how global news connects to crypto markets, make sure you subscribe. And if you found this useful, drop me a comment and let me know your thoughts. Do you think geopolitical tensions pushes crypto higher long term or creates more risk for investors? And like I mentioned earlier, if you want to continue this conversation, episode 5 of the UK Crypto Podcast is out right now, where me and Paula Talks Crypto discuss whether crypto itself is risky or whether it's the way people behave in crypto that creates most of the danger. That episode is linked right here on the screen and in the description. Go and watch it next. I'll see you on the next one. And remember this, the strength of the wolf is in the pack.